What's going on, guys? Hope you're having an absolutely fantastic day. So hopefully you're not holding any Netflix shares today, right? Because Netflix shareholders are definitely not having a fantastic day, right? So shares fall 20% on slowing subscriber growth. So obviously slowing subscriber growth is not the only issue with Netflix. We'll get into that in a moment, right? But I think it's very stunning to see that a big company such as Netflix, right? This is a $250 billion company, just lost 20% of its market cap just like that overnight. So that's $50 billion of shareholder wealth just evaporated, right? So we'll just go through some of these points and then I'll give you some of my thoughts. Netflix reported fourth quarter earnings after the bell on Thursday. So the streamer beat on both top and bottom lines, right? But shares plunged in after hours trading on slowing subscriber growth. So I don't think they beat on top line because I think their revenue came in line. So the company said for the first quarter of 2022, it expects to add 2.5 million subscribers compared with the nearly 4 million it added in Q1 2021, right? So I think this is the big issue and why a lot of growth stocks are being sold off, right? Because the forecast just keeps getting lower and lower, right? Their forward guidance, because last year was such a spectacular year for Netflix, right? So a lot of the growth companies, they probably have been priced in to say that, oh, they can actually grow this 3.98 to maybe 4.5 or 4.4 or something like that, right? But instead, it's actually contracting, right? Because when times are good, people get way too optimistic, right? Because maybe there is some catalyst, which there was. I'm not going to mention what the catalyst was because I mentioned it in my last video and I basically got censored. But basically, if there's this kind of catalyst, something good happens, people expect it to continue going on and on forever, right? So just take a look at some of the numbers. Netflix, $1.33 earnings versus 82 cents expected, right? So that's very, very good, right? Nearly 50% plus beat, right? So revenue 7.1, so same revenue, but their subscriptions, as you can see, their forecast is low, right? So people are basically repricing the stock, right? So if you do enjoy the up-to-date news, do help me smash up the like button, hit subscribe, and hit the bell button. So if another issue that is plaguing Netflix right now, in my opinion, is that their content, right? I think they're putting out very sloppy content. It's not very well done. It's not like on a scale of 1 to 10, you wouldn't rate it at a 10, right? Maybe it's like a 5 at most, right? I've watched a lot of the Netflix original like content right now, right? So I think they're focusing on like pushing out a lot of content, but not really focusing on the quality. Meanwhile, the next thing is also that their pricing, right? You can see Netflix is on one of the top pricing here, which HBO Max at $15. I think HBO Max is incredibly affordable compared to Netflix because of how much content and how much intellectual property HBO actually has, right? Think of like Game of Thrones or something like that, right? So the new Game of Thrones that's going to come out, I think that's going to be like huge for HBO, right? So you can see Hulu, YouTube Premium, CBS All Access, but I don't think people use CBS All Access. But Disney Plus and Apple TV, you can see all of it is so cheap, right? Especially Disney Plus, right? And all their content that they have, right? So I think it's another issue with Netflix is their pricing right now, right? And especially hiking pricing in 2022, right? So the streaming media company said Friday that it's raising its prices, right, to $15.50. So this is actually a good sign for Netflix, right? They are confident that they can raise prices and basically not lose a lot of market share, right? Whether that is the case or not, we will see maybe in a few months or maybe few quarters, right? So if you are able to hike prices without losing the market share, then that is very good, right? Without losing your subscribers, right? But with all the competition heating up here, right? I think this streaming space is going to be extremely competitive, right? They haven't even included Amazon on this checklist, right? So yeah, next part of this video, I just want to give out a warning to all these high-flying tech investors, right? Especially with all the mega caps right now, right? Because people are thinking like these mega caps are like invincible and all, right? And we can see from the small cap and the mid caps, right? They've been absolutely destroyed, right? Some of the stocks like Palantir down 68%, down almost 70%. So and that's not the only stock, right? Like CrowdStrike is down, I think 50+%. All these super high growth stocks because during that illness season, they have been priced very, very far ahead. So if we look at the Microsoft price to earnings growth ratio, right? So 2022 estimates are 33.22, right? So that's a forward estimate, right? So what happens if they miss earnings by a bit? So this might be turned to 35. So if it's like a 35 PE ratio, right, you can see that it's actually a very, very steep price to pay for this stock, right? Because I would say historical averages would be around like 25, because Microsoft is a mega cap company, right? So it's probably priced with a premium as well, and that's a very rich premium, because normal S&P historical average is around 15, right? So even if it's 25, it's like 10 years extra to make that premium just because it's Microsoft, right? But even if it's 10 year extra, that still represents like a 33% downside on the stock, right? So I think all these mega caps, the expensive ones, especially like Tesla, Nvidia, Microsoft, right? I think it's becoming very scary to hold all these stocks, right? Because the market is starting to reprice all these things, and all this like very, very high growth and basically a lot priced into their future, right? And that's incredibly scary if you're holding the stock, because you can see that the downside is quite steep, right? Even for something like a 2 trillion company, Microsoft stock, they can lose 33% in my forecast, and that's putting it very very optimistic view, right? That is like what 600 billion of market cap that they can get wiped out just like that, right? So yeah, in my opinion, if you're holding all this like Tesla, Nvidia, might want to be more careful. Or if you're saying that they can outgrow all their problems, yeah, I do agree that eventually, right, they will be way higher price than now. And if we take a look at when is that eventually, right, you can see that the same thing can be said that, yeah, eventually Microsoft outgrew its collapse from the dot-com bubble, right? But let's take a look, right, what happened here. So I'm not even picking the exact top, right? But you can see that, you can see that 14, 15, 16, about 16 years after Microsoft faced the dot-com bust. Of course, you can say you're buying here, buying here, buying here. But most likely what will happen is you're selling here, after the top, you're selling here, you're selling here, you're selling here, and all your stocks are just gone, right? So a lot of people don't have that conviction to continue buying, right? And let alone the cash, right? So I think this is a warning to all those very high-flying tech investors that, it's not impossible for something like that to happen to Tesla. Maybe 16 years of stagnation in the stock. Let's say even 5 years. I don't think even most of the Tesla investors are realizing that this can even happen for 5 years. And the company's fundamentals are insane, but it's just that the pricing is much, way too high, right? And the next thing I want to look at is actually the weightage of the companies in the Nasdaq 100, right? So if you look at Apple, 11% weighting. So imagine if tomorrow Apple just probably Apple won't have the same thing as Netflix, right? But even if Apple has like a 20% correction or drawdown, right, you can see that the whole index will lose 2% just because of Apple's price drop, right? And the rest of these companies, right, when Apple goes down, when all this Microsoft, Amazon all goes down, right, definitely the rest of the market gets pulled down with it, right? So if Apple is down 20%, I can almost say with like a 90% certainty that the whole index, right, will be down 10%. So next thing to note is Cathie Wood sounds the alarm of risk of US recession and serious slowdown in China, right? So maybe Cathie Wood watched my YouTube video, so now she's maybe understanding what's happening, right? So that's obviously just a joke. But yeah, I mentioned this. The US is looking like it's going to go into a recession in the next, maybe I would say within the next 1 year. I'm not like predicting a recession or anything. It's just that the signs are there, right? So not predicting, just saying the signs are there. So any policy misstep or anything going wrong might lead to this possible outcome, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and hit the bell button.